In this episode of Investors and Operators, I sit down with Barry Uphoff, founder and managing partner of Martis Capital. We're going to dive deep into his life and career, what it's like starting a firm from scratch, and a whole lot more topics. Barry, let's just kind of get the high level first on Martis before we rewind a lot and just kind of get your life story.
Look, Mardis has been in existence for about 10 years. We were originally seeded by Capricorn Investment Group, which is Jeff Scull's family office here in the Palo Alto area. We've always had a focus on healthcare services, healthcare IT, and some more consumer-oriented things. Initially, probably more family office backing, but as we've migrated now, investing out of our third fund, just over $1.25 billion of total money in the ground. We've migrated some traditional institutional investors like universities, endowments, large institutions from New York City and the West Coast and the like, but still have a lot of the great families as investors and great partners.
Cool. Well, let's rewind and hear your story growing up. Where are you from? And just, who were you in high school? Who were you in middle school? Let's go all the way back.
So getting in the Wayback Machine, look, I was born and raised in a small town in Nebraska. When I was growing up there, I thought it was from a big city. It was the 7th largest city in Nebraska at about 15,000. I soon realized later in life that wasn't such a big city. We did a lot of things in Nebraska. We loved football. We did a lot of sports and such. Unfortunately, I lost my father and grandfather at a pretty early age. I was 9. And I think that created a sense of responsibility and needing to step up within the family. It also created a situation where I leaned a lot towards role models. I had a Taekwondo instructor who was very instructive and just a terrific person in my life. I ended up being a 2nd-degree black belt by age 15. That was important. That kept me off the streets. And then I just engaged a lot in working in various jobs. One in particular, I remember one summer I was working for a construction company. All summer, probably earned maybe $3,000 or $4,000 for hard work shoveling concrete. And along the way, one of the coworkers said, "I've got a Toyota Land Cruiser I want to sell." And I made him a low offer, fixed the Toyota Land Cruiser up over the summer, had good fun in it on the river, and then got an offer about 4 months later in a dishwashing job I had at a steakhouse, and I more than doubled my money in that. And I thought, well, that's interesting. I worked all summer breaking my back versus I invested in this Toyota Land Cruiser and made almost as much money doing that and had a lot of fun with that. So I think that planted a little bit of a seed, right, for building things, and mixed with that Midwestern mentality of just hard work and such was a nice combination.
Wow. Okay. Well, there are 3 directions we can go with this, but let's rewind a little bit, or let's go back to the point about, with your dad and your grandfather and that summer at 9. You're like, I went through a similar thing with my dad passed junior year going into college. And then my brother passed a couple years later, both from brain tumors. And that just had a profound impact in, I think, how I was approaching life. And honestly, like growing up, my dad was a pilot for the airlines, and like college was paid for. And then that episode, that occurrence junior year just completely changed how I looked at life. And I had 2 jobs starting that year and school, but how did that impact you? What was the family dynamic with your mom? And did you have other siblings? And what was that kind of like?
Yes, I had an older sister, but she had just graduated high school. So really it was just myself and my mom. And I think there was a big responsibility for looking after her, the household. Look, I always loved math and science. So one of the things that this triggered was a focus on becoming a physician and trying to help others maybe who suffered from cancer. So I always wanted to be a physician from a pretty early age. And that led me ultimately to Johns Hopkins to study biochemistry there. But it certainly instilled a work ethic in me, a curiosity around science, and really just an interest in becoming a physician at a pretty early age. I did have I really enjoyed my time at Johns Hopkins. It introduced me to lacrosse, which would have been a great sport to play. We had Nebraska was a lot of football and wrestling, which was good fun, but this game of lacrosse was exciting when I saw it, and ultimately was able to hand that to my 3 sons who played college lacrosse.
When you're doing Taekwondo, were you doing sparring? I did a fair amount of years in jiu-jitsu, which is kind of a different sport. But like what was it like? You're doing it through like 9 years old through 15?
Yes, a lot of sparring, a lot of tournaments. My first exposure and travels were really because of Taekwondo. I worked hard at it, was lucky enough to be nationally ranked in my teenagers, so traveled a lot to tournaments, sparring, forms for testing, breaking boards and such. So it was, that was also a very good thing for just all around discipline and keeping oneself busy, staying out of trouble. I would say, additionally, I developed a love for motorcycles, as a kid. So those were always fun to play around with. Growing up in Nebraska in a rural setting, you can just ride a little dirt bike wherever you want to go, and dirt's certainly a little bit softer than concrete.
So let's kind of bridge the gap between Johns Hopkins and biochemistry to what you're doing now. I mean, what was your first job coming out of college?
Yeah. Sometimes a path, it feels like you could create a path where it looks pretty disconnected, but then sometimes you look back 10, 20 years and it all seems to flow together. Studied biochemistry at Johns Hopkins. Was a great institution, got to do research with Nobel Prize winners. Was very much on the track for medical school. I actually got accepted to Johns Hopkins in my junior year to attend their medical school. But then about that time, the president of the university came to me and said, with your academic and athletic background, you ought to apply for this Rhodes Scholarship. And I didn't know much about the Rhodes Scholarship. I said, let me research a little bit and study what it's all about. At that point, I'd never traveled outside the United States, as a senior year in college. And look, it looked like a great opportunity. My life had been heavily science oriented, never been outside the United States. I saw it was going to add a couple of years to education, but the opportunity to go to England, study something completely different was appealing. So applied for that scholarship, was lucky enough to be accepted, and studied law at Oxford for about 2 years. During that period, I think I started to talk with quite a few people, and there were a lot of changes going on in healthcare, and many physicians and other business leaders said, you could probably have a greater impact on people and lives pursuing a business path in healthcare. So I deferred medical school 1 more year as I went to work for Booz Allen and Hamilton in their healthcare practice out of Chicago. That was my first job. And at the same time, I enrolled in full-time business school at the University of Chicago. I really wanted to immerse myself in 1 year to see, what is this business track like, having been so science and academic oriented. And look, I ended up loving it. And so after a year, passed on medical school, finished up my MBA at the University of Chicago, and continued the trajectory at Booz Allen.
How did you do Booz Allen as well as B school at the same time?
I just worked really hard. It was one of these things. I really did. I remember asking Booz Allen, hey, are you guys okay if I do this MBA? And they said, look, we're fine with you doing that, but if your work starts to suffer, we're going to ask you to pull back. And so I was very heads down, worked hard in between travels, and found a way to make it work in a 2-year period of time. Looking back, I think it was something that the two went together very well. I had never had any formal business education. So having this Booz Allen as real world education day to day, coupled with the textbook stuff. The two went together very well. And maybe it was, 1 and 1 equaled, from an effort standpoint, maybe it only required 1.5 times. So the two did go together quite well. Continuing on, after about 3.5 years at Booz Allen, there were a few folks from Booz Allen and a couple other consulting firms who said, let's start a new consulting firm. Let's start a consulting firm. And mind you, this was the early 90s, that resides at the intersection of business strategy and technology. And was lucky enough to form and be a founding principal in a firm called Diamond Technology Partners. That firm was backed by a VC firm, and as partners, we each wrote a check to help start the business as well. That was a big step out for me. My role there was to lead the healthcare practice as well, and a fabulous experience. We grew the firm from about a dozen to hundreds of employees and an IPO in a period of about 7 years. So that was a tremendous education in founding a business, the role that venture capital can play, in a company. And, along the way, I did quite a few projects consulting for private equity firms like Madison Dearborn, Carlyle, Trivest, and others on due diligence. And I always said to myself, look, I was not going to leave Diamond for another consulting firm, but this notion of building businesses was exciting. And ultimately, I did get a few offers from private equity firms to join them. I think at that time it was a little bit atypical, my background. I think the typical background then was investment banking, then private equity. So the jump from consulting to private equity was a little bit unique, but I think worked well for me and working and partnering with companies and entrepreneurs.
Let's kind of go over to the Mardis story now. Like, what is the founding story of Mardis, and why did you decide to start the fund? What was it like, when you're just getting it off the ground?
Yeah, I mean, look, we founded Mardis with a viewpoint of there's an opportunity to partner with entrepreneurs, and partnership can mean a lot of things. In our view, a lot of it was bringing that consulting approach to working with executives and entrepreneurs. So many times in consulting, you're being helpful, you're giving advice, and bringing that flavor into finance, where many times it can be a long dating period before you make an investment in a company. We've had situations where one of our first investments, I first met the entrepreneur at Trivest in around 2003. And, he was an individual who did not want to sell a control stake in his business, but he knew we could add great value. So coming back to Martis, that partnership approach, knowing and helping him for a period of time with advice for many years, and then being flexible. He did not want to sell a controlled position. And one of the things at Martis we wanted to make sure that we were doing from day one is being flexible with doing minority investments as well. That's something that many times is a better solution for entrepreneurs, where they don't want to take all their chips off the table, but they know they could use a hand, right? They know they could use a hand with capital, maybe with banking relationships, adding people to their business. And many entrepreneurs are sort of one-armed paper hangers. They're doing it all. And if you can build up that trust,
I would not know what that's like at all.
That's right. That may not work these days, but what are paper hangers? Maybe one-handed coders or something is a better.
Oh no, I mean from the entrepreneurial side, very familiar with the pain of that.
Yeah. Well, some of these folks, you develop relationships with them and you help them along the way. And when the time comes, and it will come for these entrepreneurs who've never taken outside capital, where they feel like, gosh, I could really use some capital now, hopefully you're the first person they want to call. And, so that enables, again, coming back to Martis, I would say we tend to be more value-oriented investors. We don't want to pay a top price, but we want to pay a fair price. We want to pay a fair price for the work that we're going to be doing with those companies, because look, many of these businesses, if they haven't had traditional outside money in them. Maybe they haven't invested in much in people, in technology, and in infrastructure, and putting a lot of those aspects into place is hard work. It's a heavy lift. And that's something that we don't shy away from at Mardis. We like to spend a lot of time with that lift, with that playbook. And, in doing so, we think we're building something of greater value during our ownership period. So ideally, sorry, Jordan, please go ahead.
Oh, what does Martis mean?
Martis, the name itself, when we created the firm, we were trying to come up with a name. And all the names and ideas we had, it's amazing how everything seems to be taken as firms register. In the early days, we had a team offsite in the Sierra Mountains, particularly in the Mardis Valley. So Mardis actually refers to a geography in the Sierras, not too far from Truckee. There's the Mardis Valley, there's the Mardis Creek, Mardis Peak. It's just this whole area, and
so you guys looked outside the window and said, I think we'll just call it something. Okay, Mardis Capital, done.
Let's just call it Mardis Capital. It's pretty simple. You can pronounce it a whole lot better. Unlike my
guys, we have
last...
more important things to discuss here than our name. Let's look outside. There we go. Let's move on.
There it is, right? It's mountains, it's rivers, it's streams, right? That's very nice. So that's where the Mardis name came from, and nobody had taken that, so we jumped on it. Right, that's why we jumped on it, and we later found out it lends itself nicely to a website where you can throw in a lot of lakes, rivers, and streams, and so forth as well.
So now that you're on Fund 3, let's rewind to when you were raising Fund 1, and what was that like when you were just getting it off the ground and doing Fund 1, and what advice do you have to the emerging managers out there?
Yeah, doing Fund 1, look, find yourself a great partner. We were lucky enough to have that in Jeff Skull and Capricorn, tremendous partners. And what I mean by that is, they made a big commitment to our first fund, and we're flexible, accommodative. We used their office space for our first fund. And, it was a great way to get started. And, Jeff is an amazing person. He's done tremendous things in the world. And that helped a lot as well. As we now talked with other families, I think that Jeff's seal of approval was a big plus. And, migrating from fund, that's kind of Fund 1, so Fund 1, you want to have.
Let's dive a little bit more into that. I mean, what are some of the more second or third level, things that are not, maybe as obvious, like find a great partner, yes, find someone who has $1 billion and invest in the fund. Thanks. Check. Okay. But yeah, let's go back to that point. Or what's some of the scar tissue from raising the first fund, or not just raising the fund, that part, but also just operating at that stage of the business?
Yeah. Well, I think, look, one of the things, just going a little bit deeper on those partners, you want to make sure that, especially on a first fund, you're going to have people ask for discounts, right? People are going to want discounts on fees and on carry and such. And look, one advice I would say is try hard not to give up too much in those. And I think some of your best investors will realize to be fully aligned, that's you don't want to be penny wise and pound foolish. So I know there's going to be a big push in funding the first dollars to get those dollars raised, and get the dollars in the door. But don't sell your short with giving big discounts on that. And frankly, you want to make sure you have people who you're aligned with. And if you're making money for them, then you as a team should be making money as well. I think in terms of the team, make sure you're working with people that that are nicely complementary to you. People who've come from similar walks of life that can maybe complement you in other ways. Getting that team right out of the get-go is really important, because In the first fund, you're going to be working together. And if you go from fund one to fund two, and you have a lot of transition in team members, that can be difficult. It's difficult to affect, and it's difficult to explain to your investors, because investors like to see consistency. And then last, I would say, in terms of building out the portfolio, really think a lot about portfolio construction. I think a lot of private equity firms think about investing in businesses without thinking too much. I did spend a couple of years with a credit-oriented hedge fund between Trivest and Capricorn. Hedge funds think a lot about portfolio construction and companies, so they're not all correlated. Maybe they have different times of duration and exposure and length of ownership. And I think that's a plus, for getting from fund one to fund two. Because when you go to fund two, some of your fund one investors they're gonna want to see some realizations in what you've done. So not having everything invested in your fund that's going to take 5 to 10 years until you realize it, I think is important. And we built a portfolio that had some opportunities with earlier timeframes to realization, and some that were a little bit longer. And I think that was a nice, bridge, right, for the folks in fund one who could see, all right, this works. They're returning capital before they're out to raise the next fund.
So I don't know how many of those tips are from mistakes, or you did them all right. But let's address what are some of the early mistakes you guys made in fund one, either on the portfolio side, on the team side, on just how to run it on the fundraising side? Like, what are some of the mistakes that you made that people can learn from?
Yeah, I would say, one of the things is just be specialization and being focused is important. In our first fund, with a number of family offices as background, our mandate, we had to be a little bit broader. And what I mean by that is we did some high yield debt investing, kind of special situations, growth and buyouts, and a couple of situations that were more VC in nature. Now, I think family offices, that works. Their breadth of their mandate can support that. But I think at the same time, that can be difficult to execute. We've got one investment that we've been invested in now for about a decade. And they're doing great, getting fantastic traction now, but the venture investments can take a long time.
Yeah.
So
do you think that is a function of your money came from somebody who said, Barry, you and the team are really smart. You've done debt, you've done venture, you've done growth, you've done buyout, just go off and make more money. And you're like, yeah, fine, we'll do everything. And that was a reflection of, your investor, your background. Do you think that if you push back to, Jeff and said, hey, we're going to do this, buyout, healthcare, and we're going to do this really well. Did you have that, those thoughts from the beginning? Like, did you want to specialize, but you're being pulled from Jeff and the other investors?
I think it was a combination of, if you look at my background, a little bit of debt investing at Silver Point, growth and buyout investing at Trivest, and then being out here on the West Coast where we founded the firm in Palo Alto, where there's a lot of venture capital type investment opportunities. It was probably a mix of all of my past and some of the team members' past, where you say, I think we can make money across the board here, and you get that support from your investors. I think, again, to your question on realizing some things, focus is good. And I think focus has only gotten more important in private equity investing as gotten more competitive. And you have to specialize a little bit. It's a little bit like maybe a freshman or sophomore year where you can be an undeclared major. And then, as you move on, declare one. That doesn't fit well with my background, where I was biochemistry type 1 and very focused. But I can imagine, that's reasonable advice that I would give my kids. Look, I think maybe, it's okay to be undeclared and then declare, right? And we were given the reins and the flexibility to do that because we had a lot of great investors. But I think in hindsight, maybe focusing a little bit more out of the gate, I would probably give that advice to people, right? I think that to be great in all three of those areas, source great opportunities in all three of those areas is is hard. It's probably better to focus a little bit. And then as you looked ahead to grow the firm, and as we were to attract institutional investors, they want to see more focus, right? They want to, their portfolio construction as an asset manager is such that they want to pick their top VC investors. They want to pick their top debt investors. They want to pick their top growth and buyout investors. So we did make the focus from Fund 1 to Fund 2 with focusing on growth and buyout, which was where we felt the bulk of the strength of the team was, and where we could be most successful.
That's really interesting. How do you think that you have changed as as running a firm from Fund 1 version of you versus Fund 3 version of you? And what did you wish that you would have known back then, almost from a managerial perspective, or other things that are, maybe not some of the points that we just covered?
Yeah. I mean, it's probably an often used word, but you don't think about it maybe until you've been through something for 10 years, but delegation is probably another one, and building out a team, right? I mean, I think about Fund 1, and I was really trying to do a lot, if not all of it, right? From investor relations, sourcing opportunities, building the companies, sitting on the boards, and exiting the companies, right? And that's a lot to bite off. And I think, a lot of the questions we got from potential investors in future years was, gosh, it looks like, Barry, you're sitting on about 60% of the boards. It looks like you've sourced maybe 60% of the opportunities. How are you going to grow and develop with other people? So we really did add some terrific people to the equation. Shahab Vagafi, fellow partner from Carlisle, he brought on Mario Moreno, who was also at Carlisle. I got introduced to a fellow, Owen Davis, here out of San Francisco from Francisco Partners. And, with that, if you looked at the difference between Fund 1 and Fund 2 was sort of delegation and sharing and responsibility, those individuals, it really migrated a lot, to them, to those three, with sourcing, sitting on the boards, and exiting. And now that we're in Fund 3, as I look at that, they're really doing the bulk of a lot of those activities, which is great. I spent a lot of time with investors. I spent a lot of time still with portfolio companies and sourcing, but it's not like it was in Fund 1, right? Where maybe it was 50 to 60% of everything going on.
Yeah. Well, on the similar theme of kind of big lessons, either from what you did right or things that didn't go so well, maybe kind of zooming back at your whole career. I mean, you do see a lot of sunshine and rainbows here, and everything has worked really, really well. But what are some of maybe the more difficult moments that you really grew from, and kind of what were they? How did they shape you?
Yeah, I think on the delegation front, I'll continue on that theme a little bit, and maybe shift over to the.
Is that a recurring theme?
It is a common theme. I think going back, you just when as a kid in a very humble backgrounds where we did everything, right? And as a kid, it was my mother and I. We mowed the lawn. We did everything. My advice, one of the things I would say is I kind of carried that forward, and even through my 30s and 40s of working in these firms, I would still mow the lawn, do everything, clean the pool, do all these activities. A, because I could. B, I enjoyed it. It was a little therapeutic. And C, it saved money, right? So, I would say, don't be so cheap. Spend some of that money along the way to make your life easier, to have more time with your family, and do those things, right? I think that could sort of cut across the board. I shared some of the personal stories there around the home, of delegating some of those activities, or just getting folks to help you, if you will. But I think professionally as well, right? Just taking a little bit of time.
Let's go back to that point about delegation. And it's
Yeah.
interesting because I think it does come from that early experience when your father and grandfather passed and it was on you. And it was you and your mom at home, your sister was off at college.
Yeah.
And it was on you to do everything. And it's interesting because in one part, you're at where you're at, you did the career track, the education track, because you learned how to do everything and do it well. And then on the other side of that, you did everything well. You can't scale a business if you are doing everything well, as opposed to that, to growing the team. So it's really interesting just to see, and almost like the self-awareness in our own journey. And I have a much less successful business, a much smaller business, but I had the exact same problem with delegation. In like, yeah, guess what? Other people can write really damn good LinkedIn content. Like, I'm not the only one in our team who can write content. Like,
right.
Brilliant moment.
Yeah, no, exactly. Look, I remember a period in sort of around Fund 2 where I broke my collarbone in a biking accident and couldn't travel for a period of time. And, that wasn't necessarily a bad thing, right? All of a sudden, other people you see around you step up for you, step up for the team in travel, meeting with companies, filling in for board meetings. And you kind of say, wow, that went just fine without me there, right? And that's a learning moment. I think also even in the pandemic has been a bit of a learning moment as well. When we were raising our first and second funds, a lot of people asked the question, how does that work with you having a San Francisco and DC office? And I would say, look, we use technology. At that time, it was Skype. We do our meetings every Monday, and we're on calls frequently. And whenever we staff an opportunity and investment, we make sure there's somebody from both San Francisco and DC represented for water cooler chat in each area. And I don't know that folks necessarily bought that. I think the preference at that time was, look, have a single office, have everybody from that office and function that way. We felt working with our companies was good to have two offices to source and work with those businesses. And I think that was a good training for the pandemic. I mean, we just switched over pretty seamlessly overnight to doing more meetings, online and doing like what we're doing right here. So I think, for our next fundraise, I can't wait. I hope people ask, what about these two offices? And I'll say we were just training for a pandemic. I do worry a little bit now about, coming back. I do like, I like being back in an office. So, so I hope we strike the benefits of both, of the working remote aspect as well as coming into the office. We haven't quite gotten there yet in San Francisco and DC, but look, so I guess that's another lesson learned is, when you get thrown a little bit of a curveball like we did with a pandemic or however, just being able to adjust and tune and, trying to make some lemonade out of lemons.
I noticed that in your notes that the team sent, that you did a fair amount of work with like Pat Tillman Foundation and Yellow Ribbon Fund, and just curious, like, how did you get started with veteran activities? Like, where does it come from?
Yeah. So the starting point really was my father and grandfather were both, involved in the military. Probably knew my grandfather's even more. He was on a sub in World War II, and just some great stories there. Had cousins in the service. When I was at Oxford, I had a cousin at Lake and Heath there, which was about 2 hours away from Oxford. And I always felt like I could go there and get back to about 50% of America when you got on the base. They had American football and you could buy American goods and the PX and everything. So, so there was always a lot of respect and appreciation for the military. And that was the seeding of it. I mean, look, we've hired individuals. We have a CEO who's very involved with the military, and John Mardis, and starting the Wounded Warriors program. Pat Tillman is a wonderful organization. It's just, it's very humbling to see every year when we select the Pat Tillman scholarship recipients, just what they've done and accomplished. This is probably an incorrect thing to say, and I'm sure it'll get it edited out, but someone once described the Pat Tillman scholars as Rhodes Scholars with balls.
No, we're keeping that one in.
Actually, I'll give full credit where credit's due. That was Marie Tillman who said that, and dang, that's pretty accurate. I really love that description. It's amazing what these people have done for our country. They're smart, they work hard, and we like to surround ourselves and get people like that to work in our organization. So that's been a big piece of what we do in our daily lives and work.
Well, let's kind of shift over to, you're so deep into the healthcare sector, and I'm curious more because we both had family that passed from cancer, and I was wondering, what do you think are some of the big breakthroughs that you're going to see in cancer research in the next, maybe the next 3 to 5 years? What are the big things that scientists are working on from cancer research? My dad and brother passed from brain tumors, like brain cancer, but I don't even know where to start with that.
Right.
And, to be honest, after that happened, I just blocked it out of my life, and I'm going to do everything else in my life. But I'm 36 now, and stuff happens in the next 10 to 20 years. Yeah. So I'm just curious. I want to re-engage with that, and I'm just curious. So you cover the healthcare sector so deeply. Just where are we going in the next couple of years?
Yeah, no, it's a great question. I will say one of the things that I'm excited about, my grandfather died of pancreatic cancer, which is a very tough one because, it's tough, first of all, to detect, right? It's very, it's pretty far within the organs. And by the time it's usually detectable, it's usually too late, right? That's a tough one. What I'm excited about, and ironically next week, I'm going to be at the University of Nebraska Medical Center at the Buffett Cancer Center, talking with some folks doing some interesting research in pancreatic cancer and such. What I'm excited about is a lot of the whole blood analysis. And I think this is something we're going to see a tremendous amount of in future years. I mean, look, to diagnose a lot of diseases, we've used imaging and other techniques to look in and to see what's going on. If you get to that next level, the blood and lymphatic system is basically the river, if you will, that carries around broken down cells within the body. And, to go into blood, for instance, whole blood analysis and look to see what is in that whole blood, right? Because theoretically, you should be able to find broken down DNA or cell bits of like a pancreatic tumor and detect that early on. I think that's going to be a big area of development in the next 10 years. I was lucky enough to work with a fellow, Dr. Wayne Ryan, who founded Streck Laboratories out of Omaha, probably the smartest man I've ever known in hematology. And this was an area that he was very interested in. And you see that, I think, carry on a little bit at the University of Nebraska Medical Center. But that's probably the area that I have a lot of interest and hope for, right? As a non-invasive way, look into the blood, see what's floating around in the body and what diseases might be developing. In my own case, I will say I look, with a father with pancreatic cancer and got into the colon, I got my first colonoscopy at age 30.
Okay.
And it wasn't, look, the doctor looked at me and said, "Are you crazy? That's something you don't do until you're 50. And I said, I had a father or grandfather who passed away from something in that area, and I'll just pay for this. I'll spend the $1,500 and have a colonoscopy."
It's interesting you mentioned that because when we were going, when my dad died of a brain tumor, my brother died of a brain tumor. So therefore, what am I going to do? Go to the doctor. Hey, should I get a scan? Insurance doesn't cover that. Insurance doesn't cover what? You don't have a pre-existing condition. I just told you that my dad and brother died of a brain tumor. I think there might be a good case here for me to get a scan.
Right. Well, and that's part of the challenge of the healthcare system in America. It's much more reactive than proactive. And hopefully that's something that changes as well. We could do a whole nother discussion, just on that. But yeah, no, look, I paid for it out of pocket. It was normal at 30. I did it again at 35. It was normal. At 40, it was abnormal. I had 2 or 3 polyps, had those removed, and then have proceeded to do colonoscopies about every 2 to 3 years since then. So who knows, right? I mean, who knows what that would have developed into had I not even had a colonoscopy until age 50, which is basically, where guidelines are today. When I did have some precancerous polyps, as they call them, at age 40.
Yeah. Well, let's, on a similar note in the healthcare industry, what do you think is the biggest thing people are not talking about from maybe a technology perspective, just broader? What are some big themes that you have seen that people are not discussing, maybe because the media attention or whatever?
Yeah. I think, I think one that's just starting to get talked about, and we're at the beginning of it, is consumerism in healthcare, right? I mean, for so long, the view in healthcare was, look, science, healthcare, it's complicated. So we can't share this information, or we can't be transparent with this pricing. It just costs this. There was this sort of protection around it all the way from, the information and the data about the care, sharing of information, pricing, transparency, where it was, for lack of better words, sort of protected. Because look, you can't understand it as a lay person. It's just too complicated. So stay out of it. That is changing very rapidly. And, consumerism in healthcare, I would say a lot of it, I'll give credit, having a couple of millennials, I'll give credit, they're changing it in a great way, right? Because their expectation is transparency, information, instant access. If I can trade stocks on Robinhood and do fine, thank you very much, which I think my sons have done just fine over the last year doing that. I can understand and make decisions with my healthcare. So tell me the information, show me the cost benefit, give me data on outcomes, give me data on service and quality, and I can make my own decisions. Thank you very much.
That's interesting. I think it's in the shroud of regulatory privacy, which I understand the reason for that. It just makes me also think that when I'm in the doctor's office, though, and then I almost want like a doctor's note, like the meeting note. Here's what we discussed. Because this around 37 seconds after that door closes from the doctor's office, I don't even know what was said. And then I don't even know where to access this. Yeah. And on a mobile basis, on desktop, et cetera, across doctors across, 5-10 years. So I think that, to your point, with, our generation and people in their 20s, 30s and 20s, now the expectation is I'm willing to make this trade-off because I want all this from transparency. And I'm willing, I think, maybe unknowingly willing to take the downside risk of data breaches, especially in the era of social media, where it's like my whole life is on there. Therefore, I don't care if my blood type is on this, and it might. But I think that the technical side is all going to be fixed. The security side.
It's a great example. Yeah, no, that's a wonderful example, actually, Jordan. I mean, just saying, look, if somebody had my health CBC blood workup from a year ago, do I really care if somebody had my hematocrit, my blood? I really don't. I get it why we don't want to share that. There's rules around that. And it's all about trade-offs. And if I could have access and transparency to other things, I'd be willing to forego, that other bit. So there's a balance, right? There's a balance.
They're going to take that blood and they're going to make like 10 more clones of Barrys to start 10 more Martises.
I don't really want to do that.
And you'll see him walking down the street one day. Well, this has been awesome. I really appreciate this. This could be part one of a lot of topics.
Thanks, Jordan. And I thought of just one other thing I might mention there that I thought about this. So just, you'd asked the questions about lesson learned. you want to be helpful in what we're doing. And I mentioned how we develop relationships over a period of time. Many times you're working with family-owned businesses. And I will say you have to be careful. Certainly something that I've learned is not to get too close to family dynamics and family situations. That can be a tricky one. You can get sucked in too much. You're not a family member. So yeah, that's certainly one lesson I've learned through a situation or two over the last decade.
Well, I think that's really topical because, how many sponsors and, firms out there say we really want to partner with family-owned businesses. And it's just a dynamic that comes into it of how do you navigate that effectively to, yes, you care about the heritage, you care about the history, but how do you keep that appropriate distance?
Yeah.
Professional distance, so you could just focus on the task at hand.
Yeah, no, that's right. I mean, look, blood is thicker than water. That is very true. So you've got to be careful about that. I know a very good consultant who would say, if somebody doesn't go through succession by age 80, they never will, ever. And as a result, he will not take clients who are over 80 because if they haven't gone through a succession by age 80, it's not going to happen, right? They're going to go out another way, and it's kind of comical, but there's an HBO series now that somebody introduced me to called Succession, which is a little bit over the top, but I will say it's in around a family dynamic. It's not that far off.
I appreciate the time with this, and yeah, looking forward to getting this out there.
Yeah, no, thank you very much for your time today, Jordan. Really appreciate it.